What's up, my people, and of course, welcome back to Zero Miles FX TV show. If you're new to this channel, my friends, don't forget, of course, subscribe to that channel and leave a like, leave a comment about this video. So, if you're new to trading forex, I'm going to walk you step by step the beginner's guide on how to use MetaTrader 4 and also how to place your first trade. So, make sure you keep watching the video. Let's move on, guys. Okay, just a moment. Cool. Now the first thing is when you download your MT4 from your Play Store. So if you don't have MetaTrader 4, make sure you download from your Play Store. The first thing that pops up is this. Okay. Now this is, let me show you something. Okay. This this is our currency pairs. This is our currency pairs. Okay. This is our currency pairs. Okay. But if it pops up and you realize that you don't have currency pairs, you can just come and add more currency pairs from here. Then you just click OK. Then that's how you can add more currency pairs there. Okay. Now if this is our currency pairs, guys, this is our currency pairs. Okay, all these that I'm just drawing. Let me draw it again. All this is our currency pairs. Okay, now if these are currency pairs, then this is what we call our bid price. Okay, this is our bid price, and this is what we call our ask price. Okay, now you can see that if you look at these points here, these are bid price and the ask price. They are never constant. You see, when you learn forex trading, you realize that the bank just estimates the price. If you go to the bank and say that, hey guys, I want to exchange a Great Britain pound for a Japanese yen, they will just estimate the exchange rate. But you see, they're never constant, they're always moving. Now I'm going to explain to you something, guys. Okay, let me remove this. I'm going to explain to you something again. Now in the currency pairs that here I'm talking about here, these are currency pairs. I'm going to show you something. You can see that in this pair, it's a currency pair. We are having two pairs like this. AUD card, that's an Australian dollar versus a Japanese yen, JPY. There are two currency pairs. The first currency is called a base currency, okay? It's called a base currency. Let me mark it for you so that you don't forget what I'm talking about. So that is called a base. These are base currencies here. This is a base currency. Base currency, okay? That's a base currency. The first currency pairs. The first currency. The first currency is called a base currency. Then the second one, which is that, like that, is called a counterpart currency. Okay. Now let me explain to you something, guys. The base currency, you've known what I'm meaning. The base currency. Then the next one, another. You know the names now. Now let's move on. The most important thing that I want you to realize is this. Okay, what does this mean? If this is our bid prices, okay, these are our bid prices. All that you see here in this column that I've marked, this column that I've marked is of course our bid prices. Now, what does a bid price mean? Okay, bid price means, let me mark it again. Bid price means like the amount of one single unit you need to buy, of course, the base currency. Okay, the amount of one single unit you needed to buy a base currency. Let me give an example. Let's move on to that example so that you understand very well. Which example should we use? Let's use the first. Let me use this. Sorry for that. Let me use this. I'm using that. Okay, this is Great Britain pound. I think I've not even labeled it well. Just a moment, guys. Oh, sorry. Let me mark it well. Make sure it's sorry, guys. Let me mark it well. I really want you to understand what I'm marking. Yeah, I'm marking this. So this is, what is this? What's this pair? This is Great Britain pound versus an Australian dollar. So the Great Britain pound is now our base currency. Okay, that is the most important currency there. Okay, now let me explain to you something. This that you see here now is our bid price. So it therefore means that for you to sell, of course, JBP USD, you need a unit of 1.64. This price, guys, this price here. You need a unit of 1.6461 Australian dollars. You see that? Let me repeat again, guys. I want you to understand this, okay? I'm giving you an example of this. Just a moment, the thing is I'm giving you an example of this. Okay? Cool. Now, in this one that I'm giving an example, this pair is, of course, that is our bid price, and the pair that we are looking at is this Great Britain pound versus an Australian dollar. So I told you Great Britain pound now is the base currency. So now, what do we mean by our bid price? It therefore means that in order for you to sell a Great Britain pound, okay, a unit of a Great Britain pound, you need 1.6461 Australian dollars. You understand that? Cool. Now, if you've understood what that bid price means, let's move to the next step, which is, of course, our ask price. Okay, the ask price of this. I'm not just good at editing stuff, so guys, you have to bear with me. So now let's move to the asked price. This is the asked price. Okay, and we are looking at the asked price of JPP AUD. Now, what do we mean by that? We therefore mean like this, okay? We therefore mean like this. In order for you to buy Great Britain pound, okay, you need 1.6467 over Australian dollars. I don't know if you've understood. Please leave a like. If you've not understood, then of course leave a comment so I can explain to you again. I say it like this, okay? For you to buy a single unit of a Great Britain pound, you need 1.6463. You can see they're always changing. 1.62, 1.6462 Australian dollars for you to buy one unit of a Great Britain pound. Hope you've understood that. Now, if you've understood that, then that's fine. Now let's go to something that it's very important. We call it the spread. Now, if you look at these figures here, that are always also changing. This figure, like here, we have 20 there. Okay, here we have 21. We call it the spread. What does the spread mean? A spread is just like if you go. Okay, let me explain. A spread is just like the charge of every transaction. They charge you of every transaction. And how the spread comes is when you're dealing with a broker. That's why I recommend you that your spread should always be low, because so how your spreads are going to be low depends on the type of broker you're using. So if you want a broker, of course, just go on. If you're a beginner, of course, you must be in my Telegram group. Check my description here and join the Telegram group for beginners so that you keep learning how to trade Forex slowly and slowly, okay? Because I'm going to be explaining everything slowly until you reach a point of advanced level. Now, this is a spread. What does a spread mean? I told you a spread is just like the cost of every transaction. Whenever you open a trade, that's the cost of every transaction. Now, let's move on straight to something else, of course. Something else. So also a spread, again, the way you can calculate the spread is a very easy way. It's just like the cost of your transaction. You subtract the bid price minus the ask price. You get the spread. You get that? It's the cost of every transaction. I hope you have understood that. Now let's move on to another level of how to place your entries, how to place your trade. Now, if you want to place your trade, let's say you're placing your trade like here, Great Britain pound versus Australian dollar. Of course, this one here. Let's say you want to buy it, okay? Let's say you want to buy it. What you just do is you click it, then you will see here new order. So when you click new order, it brings you to this step. Okay, when it brings you to this step, I don't know whether you can see this. This is what we call a lot size. A lot size determines your risk in the market. How much are you risking? How much single units are you risking? And let me tell you one thing. The price in trading Forex is calculated in pips. And in the next video, I'll explain to you about the pips, leverage, lot sizes, and everything so that you understand everything. Also, how to calculate stop loss, how to know how much you're going to be losing and how much you're going to be winning in each trade. Now, let's go back. You can see that point. You see, this is now the lot size. You can change the lot size to 0.01 to even 1 lot size, 2 lot size, like 12 lot size, 2 lot size, 3 lot size. But the more you keep on increasing your lot size, the more, of course, you keep on increasing the amount of money the more, like now, if you can see this lot is 0.01, that's when you're dealing with a very, very small account, okay? Now, this point here is where you put your stop loss. Here is where you put your stop loss, and here is where you put your take profits. Now, what does stop loss mean? Stop loss means it means like like after you putting, like if this trade goes against me, this is the stop loss. This way you put your, this way you put the price of the stop loss. Then this way you put the price of the take profit. Stop loss means if price moves against you, okay, what you're gonna be doing is, I don't want to lose more than this. Okay, hope you've understood that. Then this also means like if you're and it happens automatically. If you set your stop loss and take profit, it's automatic. It's automatic. Okay, guys. Hope you've understood there. Now let's move on to the next step. The next step here you can see is we have here. So let's go back, guys. Okay, we were dealing with the, okay. Let's say we are taking a new order, and this is Great Britain pound card, of course. So I meant that this is our lot size. Sorry, just a moment. Let me get back. This is our lot size point where you put your lot size, and the lot size determines how much money you're gonna be losing or like that. Okay, the more you increase the lot size, the more you risk more. Okay, now let's say we're gonna use the smallest lot size. Okay, I'm just trying to show you some things here before we move on to the real things about trading forex. Now this is where you put your stop loss, then this is where you put your take profit. Stop loss means like a stop, like if price moves to this point, if price goes against me up to this point, then close the trade automatically, and it will close the trade automatically. The same goes to take profit, means if the trade goes well for me up to that price, then close the trade, close my profits automatically. Now we are going to place, let's say we are going to sell this, so we are going to sell this. I just click here at the point sell. Okay, I'm using a demo account. So when you sell, you see the cost of this trade now is 0.50 something there, 0.50. Okay, that is the cost of the trade due to the spread I explained to you at first. So in the next trade, so if you can even put the trade first without, and then if you want to put most the stop loss, you can just hold it like this, come to modify order, and then you'll put your stop losses again here, stop loss, then take profit. Okay, so that is the easiest way about using our about introduction to MetaTrader 4. Just those are the simple easy things. So the next thing is I'm going to make a video about the settings on the MetaTrader 4, and I'll explain, then after that I'll explain to you what you call a pip, all those things. A pip is a single unit of a transaction. Okay, single unit that we use to calculate the amount of money running or the amount of money you're losing. Instead of saying that I'm making $10, you can say I've made maybe 10 pips, 50 pips. So you'll all learn that. Okay, this is just the first class. So make sure you join the Telegram group, and of course be always watchful and updated about every class that is coming and stepping in. So make sure you watch this class and understand. If you don't understand, please you can inbox me on my Telegram group. See you in the next video, guys. Bye.